Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on Wednesday, and this is the 19th of October, 2011, getting on to 3 o'clock. In fact, I'm leaving right after I do this particular recording, going to the Money Show, which is in Chicago right now, and I know I'll be a speaker there, so if you're in Chicago and you happen to see this, I'd love to see you there. Otherwise, next time, what can I tell you? All right, let's look and see what we've got. The stock market's disappointed today, but this is to be expected. You know, what they're doing is the press is being used by Europe for every little, how do I say this, nuance, little dispute they're going to have, how they take out in the public. Are they going to get along in terms of Germany and France? Are they on the same page for what the Stability Fund should do? Is the Stability Fund going to be a bank? How's the money going to get to Greece? And Greece did a good job today because Greece passed, or they did a preliminary vote. And the preliminary vote says there'll be no problem in passing the new austerity measure. You saw 100,000 people in the streets. 100,000. This is big. People don't want this passed. So we'll see if it goes. I'm convinced it will pass, and I think that it'll do everybody good that it does pass. But the fact that all this gets bantered around in the public, you take one day euphoria in the market, next day you take that euphoria out. Today was one of these days where the market lost the euphoria. Okay. And the gold market certainly hasn't been rallying very much with all this news. It gets bantered about. It started up with a trading range up here. Let's call it in the 1700 to 1900 level. You got under that, so now we're trading between 1700 down to the 1530s, I guess. So it's back and forth. The market broke its up channel. It's falling to the other side of it, so there's nothing bullish on this chart action if you're a chart pattern trader. Nothing at all that I can see. In terms of what it would take to get bullish, you've got to take out 1696.80, the last rally high, or, there's another or in here. If you take out whatever today's low is, and then reverse through that to the upside and stay up tomorrow, that could capture the shorts. So it's a game back and forth here. I wrote down 1621.70, which was the July 31st close. I still think that's an important number, and that's what I think the market, like a magnet, is drawn back and forth to. If it goes down, it seems to come back up to it. If it gets above it, it's coming down to it. You're caught in no man's land right here, and the market's looking for a reason to move, and it hasn't gotten it just yet. It's hugging the 18-day average of closes. It began doing that about a week and a half ago. You can see it hit it here, and almost without exception of these 2 days, it's been hitting that 18-day average almost regularly. The close today looks to me like it's going to be, because of where it was at 12:30 Chicago time, just over that 18-day average, but you're still in a basic chart pattern that isn't pretty. In fact, it's bearish at this point. Why? Got a high that was higher than a previous high, so you're going up that way. But now we're making the lower and lows, and if tomorrow you don't take out today's high, or you just break through the low, you're going to have a pattern of lower lows. The only way to reverse it is to reverse. In other words, go down and ideally come back up and change the pattern without taking out 1628.20 back to the upside. You would capture the shorts, in my opinion, there. You're not there yet. It's like a chess game. You got to figure out what the patterns may or may not do, and this pattern is too confusing to try to trade. Look where the market's caught. I've been pointing this out to you for days. The 100 and the 18-day average of close. You're staying right there. That's your resistance point. It's not difficult to see. What's difficult to figure out is what's the next move of the market going to be. I'm guessing if you take out 1628.20, this market can dive rather hard. But to where? I'm going to guess the Bollinger Band bottom, 1597.50. Look at how this Bollinger Band widened itself out. Now, this was what you call a normal move, and I can move this here to show you what I'm saying. I got to do it a click at a time using this type of pointer, but this is a more normal Bollinger Band. Every now and then it widens out, but you narrow in, and you stay in that general pattern. When the market collapsed at the end of September, you took that band and widened it all the way out. It's not a normal pattern. And normal patterns get fixed. And they get fixed often by sideways movement. And that's exactly what you've been doing. You've been going very much sideways, and suddenly look how that band is narrowing back in. My point is that the market's now in a trading range with downside bias, and what can change that, I guess, is something that motivates the market to reverse back up, ideally through today's high, to get the bulls some steam. Without that, 1597.50 looks the most likely card. And you can see that the momentum in the market on the slow stochastic studies, what? It's turning down. So this is a measurement of market sentiment in one way. I mean, there's many ways you can think about it. Notice how as it went up, prices were going up, and as it's turned down, prices have turned back down with it. But I'm not looking for a big crash in the market. So as this red line approaches 50, it gets very neutral, and the reading's 58.80. So that just shows you another tool. Silver's in the same dilemma as the gold. It's hugging its 18-day average of closes, and look at how it's brought in this chart pattern on the Bollinger Bands. You wait, you see what it's going to do, and it is finally no longer in an overbought condition, and the copper market is in a still bias bearish position. Came back down through 328.60. It did that the other day. Now it's back under the 18-day average, and look at the Bollinger Band. You can see how these things start forming. And when we had broken down here and got on the other side of the Bollinger Band and started riding it and moving out, I started saying, if you go back to the tapes, you know, I think we're making a trading bottom here. Maybe we rally up to the 18-day average of closes and fight a battle there. It's exactly what I think is going on right now. But the bias is still down, and I think you realize that the only way this bias for copper turns up is if the world feels better. And without Europe doing something in the way of a shock and awe to get rid of this sovereign debt issue in Greece, it isn't going to happen. It's going to be the opposite. This is the drag. Copper's a very good barometer of world economic activity. Don't forget it. It really tells you how economies are going, and this market is looking for direction. You know, as I'm saying this, it reminds me that behind me is what I call a recording of one of my webinars. And you can't see this on YouTube. You're not going to see it on my website either. You need a user ID and a password to see it. It is a paid-for subscription that if you haven't tried it before, I make available free. We have plenty of people that subscribe to it. We have two types, one if you're a trading account, one if you're not. They say the same thing. It's just two different prices, and it runs about $50 for 3 days, but it's yours free. And we call it a recorded webinar. How do you get it? You talk to my staff. It's that simple. The old-fashioned way. You talk to somebody, you tell them about yourself. We're not going to take your credit card at that time and give you a subscription to it. We're going to let you try it for free, and you decide if you like it. 1-866-973-2077. I'll repeat it, and you can see the number here. That's how you get it. You don't want it, but you want our investors kit that includes everything else, go to our website at www.iraepstein.com. You can get that, but you won't get access to the webinar without speaking to somebody here. Okay, now the dollar index. It's stuck. It doesn't know where to go. Does this look like a market that there's a sudden rush to because Europe's going to fall apart and you got to buy the dollar again? Not yet. Anything can happen. This is a very strange chart. It still has bearish bias because the stochastics are embedded. So to me, this little bit of a rally is still very much a bull trap, and the market wants to go down. Now, what would make the market drop? Well, resolution in Europe. That would get the euro rally. In the corn market, I'm fearful corn's a little ahead of itself here. Overall, the question is, was this number the harvest low? And I've got reason to think it is, but that doesn't mean the market's ready to pick up and run. This is sort of sideways caught, probably pull back to the 18-day average, sit around there for a while and try to figure out what next. In the crude oil, well, I don't want to do that, Brent. I forgot to change it to December again. I'm going to do it right after this. In the bond market, this doesn't look like people running away from a European problem either. The lower the futures go, the more likely interest rates are to go up. Well, if people were fearful that Europe couldn't get their problem resolved, they'd be driving prices up the way they did before, when the Greek situation was all on top of us and everybody thought that the glass was half empty. Now you're changing to that glass is half full thinking, and maybe we just have to wait and see how it's all going to play itself out. Not easy right here. As you can see, the stock market's going to finish off the day down, but it doesn't seem to be propelling itself down at the end, and I think that's pretty good news. I'm Ira Epstein. I will talk to you tomorrow. Have a good day.